Hey, welcome to the mortgage workshop that I am just so excited to be hosting.
Yes.
I really plan to hold these more often to help educate people about all the options that are out there. So my name is Maria DiMaggio Hickman. I am a local Las Vegas realtor. I have been in the real estate business since 2001. I have 5 children and married and live in the Summerlin area. And I just absolutely love the city. I love the state of Nevada. Super passionate about being a realtor who not only gives back to the community, but also gives back to all of my clients. I give back to all my clients and all my deals, something that is really special to me. And one of the most important things to me is the team that we create for a transaction for my clients and surrounding myself and others with great people. And that's why I am so blessed and so happy to have Mario on my team, because he is a rock star of a lender, always thinking out of the box, trying to find new ways to help people get into homes that are good ways, not just, putting them in crappy situations, but really getting them into good situations where they can invest in real estate and have something great for themselves. Mario has been in the mortgage business since 2004, has rode the turbulent waves alongside with me, seen all different types of markets, different rates, highs and lows. And he just is great at thinking out of the box and getting things done. So Mario, thank you so much for being on this workshop. I'm so excited
Yes.
to have you here.
Well, thank you for having me. I appreciate it. It's a pleasure to be here. And much like yourself, and from somebody, as someone from this community, I'm born and raised here in Las Vegas. I've always lived here in Las Vegas and Henderson. I've never left. Even through the college years, I maintained and stayed here in this community. And I plan to be here for a very long time. So that's why I chose to, our mortgage company is a family business. We've been helping this community here since 1993. I've been in and out of mortgage companies, title companies, what have you, since I was a very little guy. So I've really honestly seen it all. And I wanted to be a part of the mortgage world, really, to essentially help the community. You know what I mean? I'm very passionate about not just home ownership itself and the power of home ownership and its ability to generate wealth, what have you, but how that family or person gets into home ownership, how they're able to position themselves, especially those that thought that they would never be able to purchase a home or they wouldn't have an ability to purchase a home, but to make that opportunity available to members in our community through, honest hard work is very important to me. So yeah, I'm happy to be here.
Yes. So the first thing, well, the main reason why we're on this call tonight is to
Yeah,
talk about this amazing program that you have. You can get people into a home with no money down.
that's
And I,
correct.
as their realtor, can get them hopefully some closing costs paid and have them get into a home with little to no money out of their pocket, which is the dream, right? We want that to happen. So
Absolutely.
tell me a little bit more about this program. Who is it for, and
Sure.
who can really benefit from it?
So this program itself is a true down payment grant program. Okay. So how that differs from what most of us are familiar with or what most of us have heard about previously is some sort of down payment assistance program that's either provided from a city, state, county, or from the lender side. Okay, how this specific program differs and where it is separates itself from the down payment assistance counterpart is this grant is immediately forgiven at closing, meaning on this FHA program, okay, for every FHA buyer, you would have a 3.5% down payment obligation that you would have to put up of your own money when purchasing a traditional FHA home. That would be your minimum down payment obligation. This particular down payment grant provides that 3.5% down payment funds for you. It's immediately forgiven at closing. There is no repayment terms for that money. It's provided by the lender. So instead of having to wait for a city, state, county approval for it to see if you qualify for it or for the release of the funds, the down payment grant is actually provided by the lender. So you're still able to close within a very quick, easy window on the FHA purchase. And like I said, it's a grant that's immediately forgiven at closing, meaning you walk into instant equity in the property. So unlike other 100% financing where there's still some sort of repayment term or debt obligation on like a second lien on the property or on the back end of the loan, this is a true grant. It's immediately forgiven at closing. So immediate equity takes care of your down payment. The criteria that you need to qualify for the program is very easy to qualify for in the way of any first-time homebuyer, any educator, any first responder, among a couple other qualifiers. And normally, some of the what would disqualify people from other down payment assistance programs, they're a lot more lenient on this program as well. Because on most assistance programs, you have to be under a certain amount of the area median income level, which with this exact program, they allow for a much higher median income to qualify. So it's a lot more lenient. It's a lot more accessible to the community. And it allows for people to qualify, like I said, for a true FHA loan without having to worry about that down payment obligation.
Yeah, one thing that you said that I want to go back to and
Sure.
emphasize is people don't realize that with some zero down loans, it's zero down, but you're financing 100% of the property. With
Yeah.
this particular loan, you literally walk in with 3.5% equity right off the bat.
Yeah, it's a traditional FHA loan, meaning on a traditional FHA loan, you're putting 3.5% of your own down payment down. That means your loan to value is 96.5%. You have equity in the property because you put it there, right?
Yeah.
On this down payment grant, you have that same equity because that grant is being given to you and immediately forgiven at closing. It's one of the main reasons, and to be honest with you, I always strayed away from down payment assistance myself. Because in my eyes, as a mortgage broker, someone that's been in the industry a long time, as a homeowner myself, if you're unable to come up with the 1 to 3% that you would normally need as a first-time home buyer to purchase a house previously, and your only alternative was one of these down payment assistance programs with a higher interest rate or a second lien on the property or whatever the other unfavorable terms would be, I would say, let's give it 3 to 6 months. Let's save the 1% down that you would need to purchase a property, or let's get gift funds from a family member. We've done this time and time again to put you in the most favorable position. But with this exact program, being that it's a grant, being that it's immediately forgiven at closing, and being that it is a true, again, no lien, no second obligation program, it is the best of the best for, one of the qualifying criteria.
Absolutely. And top of mind, of course, everybody, right now is very sensitive to interest rates. And you and I were talking.
Very much so.
Yeah. And you and I were talking about this, and the interest rate on this program, which is another amazing benefit, is not far off from a traditional interest rate mortgage, right?
That's exactly right. Yeah. Right now, you would see on this exact down payment grant program right now, and again, this can change every week, month, quarter, what have you. Obviously, speak to your local mortgage lender, broker, or myself, and find out where it's currently at. But as of right now, in the last couple months, this exact program has had a qualifying interest rate at 8.25%, where our prevailing market rate right now for conventional loans is somewhere in that high 7s or 8% range. So it's very equivalent. It's very similar, and it does not penalize you for qualifying in a variety of qualifying FICO ranges. Okay. So on this exact program, all you need is a minimum qualifying FICO score, which is your credit score, of 620. Okay. So as long as you have a 620 FICO score, you would be eligible for this program as long as you meet the other criteria. Now, on a qualifying conventional FHA VA loan, your credit score will dictate what your interest rate will be. Okay. So that could be an amount higher than the prevailing market rate. It could be an amount lower than the prevailing market rate, and then everywhere in between that. On this, that's one of the other great things I like about this program is where it's a static. This is where the rate is. It doesn't move. It doesn't change. You don't even have to worry about buying this rate down. It just is what it is. 8.25%, fixed, 30 years FHA, and allows you to, again, because there's no second lien, there's no additional obligation, it allows you to still refinance out of it in On an FHA loan, you have an ability to do what's called an FHA streamline, which is literally you can do 6 month after your 6 monthly mortgage payment, which is a very easy, very quick FHA refinance, or any other refinance that you'd like. But you can do that, at any time.
Yeah, it's really great. And like you said, I know that you have your sayings too, but I always say we're dating the rate right now and we're marrying the house, right? So the rate is, we don't even want to, we can always get rid of the rate. So you don't be stuck on that. And just to clarify, this down payment assistance, I want to say it again, does not need to be paid back.
Correct.
It is forgiven at closing, and there is no prepayment penalty ever to refinance, right?
That's exactly right. Yep. There's no term. There's no second lien. There's nothing. Yeah. It's 100% forgiven at closing. When you sign those papers and that money is recorded and you are now the homeowner with Clark County, it's just you, the home, and that traditional FHA loan.
Awesome. So I work for CCSD myself, and I am a first-time home buyer. I've been trying and trying and trying. My question is, Maria was saying something about CCSD workers. I'm a school bus driver.
Yep.
Does that specifically help us as well in some way, shape, or form? More so than if I just were to go find a random realtor to help me buy a house?
So on this particular program, you yourself would be meeting a couple of the different criteria already. So as a CCSD worker, as a first-time home buyer. So that would not just allow you to qualify for the program itself, but then in addition to that, a couple of the different things that Maria and I both have that we provide to our buyers as well. So she has her pieces that she helps with on our end. In addition to the down payment grant, obviously, I always want to make sure that I'm, serving the community as best possible, my clients as best possible, doing everything that I can for them. Apart from the hard work piece of it, obviously, that's the most important. But we also will take care of the upfront costs for your appraisal, because you got to remember when you're purchasing a home, there's a couple upfront or out-of-pocket expenses that even if we negotiate them to be paid by the seller to where you'll be reimbursed for them at closing, there's still things that you want to keep top of mind. Okay. So appraisal expense is always one. So on an FHA purchase, or any purchase for that matter, you're going to have an appraisal expense, usually anywhere between $500 to $600. That is due before you would ever get to closing, because you have to have an appraisal to identify the value of the property. Okay. To be able to secure a mortgage. Now, my team and I pay the upfront costs for that for our first time home buyers and different qualifiers for this program. So we would take care of something like that for you. So you wouldn't have to worry about that expense. Credit report fees, other small things like that, any out-of-pocket expense.
I'm above par. I'm in the above 700.
Perfect.
My credit score went up a lot because I just helped purchase a car for my wife. We were trying to get it together, get both of our names in it, and my credit score was higher than I thought it would be. So I was really happy about that.
That's always a nice surprise when we see that, right?
Yes. So that will help also in
absolutely
some of the criteria, the check boxes I need to
absolutely
check there. Okay. Boxes I need to check. Okay.
And then the other items that you would see is the most important is earnest money. So to be able to secure a property through negotiations and contract, all that stuff, you would have to have earnest money deposit of. Maria could go more into detail with what she normally sees as far as earnest money requirements when you submit an offer. Now, ideally, and this is where success stories come in, and this is obviously with experience and how we, with our down payment grant buyers, try to position them, is ideally Maria's going to go out there and we're going to already know from the very beginning stages of just the pre-approval process exactly the amount of money you would need to negotiate from the seller to make sure that when you get to closing, we're going to have either all of your money refunded to you, right? Your earnest money deposit and any other of these out-of-pocket expenses, or at least as much of it as possible. Okay. So that's something that Maria will go out and help negotiate with from the seller side. So it's just a perfect storm right now with the market that we're currently in, with, things had, slowing down a little bit because of interest rates, especially seasonality, the time of year. But right now you have many, many sellers that are looking to do whatever they can to get these properties sold that are being listed. So as a buyer, you have a lot more leverage to recoup or pay for all of or very near all of the expense. So
how much of that money should my wife and I save? Because we're going to be looking, we just got into this place. So for renting.
okay.
So we got another 6 months or so left
On the lease.
on the, yeah,
Awesome.
basically, yeah, for renting. How much would you suggest we save before we start looking to get this house or a house?
Maria, I'm going to let you touch on that real quick, just on the earnest money piece inside of it, and then I'll go a little bit more into detail on my end, on the finance side. But yeah, talk a little bit about the earnest money side.
So the earnest money side really depends on the purchase price of the house. You can see it anywhere from $1,500 on the low end to $10,000 to $50,000, depending on what price range you're in. But if you are in like the $300,000 to $500,000 price range, it's usually about 10%. So $3,000 to $5,000 is what you want to think of. Like about 10% of the purchase price is what you see, and then it caps out at about $20,000. So I would say in your mind, think of, if you're at 300,000 purchase price, you're going to want at least 3,000 for earnest money, 500,000, about 5,000, and so on.
Okay.
Yeah, I would say that's a pretty good estimate.
Right, because the last time I was qualifying for, I was like $4,000 short, because my wife and I were going through so much other stuff that we were putting our money towards. Now that things have settled down, now we can start really saving for the house. But it was just a matter of the time now that we have to do so.
100%.
Yeah, and now that we're doing better, of course, I work for the school district, so I'm doing really well there. I've been there about 1.5 years now. Is it going to matter how long I've been with the job?
Not in your case, if you are an hourly paid or some sort of salaried worker, as long as we can fulfill doesn't have to be with the same job, doesn't even have to be with, the same 3 jobs, but a 2-year work history is ideally what we're looking for to fulfill an employment history.
In April, it will be right at 2 years.
Yep. So you'll be perfect in that regard. So it does actually sound like in April too, this is something that you might want to keep top of mind. And this is why these conversations are so important, because regardless of what stage you are in the buying process, because this all comes down to education, right? You understanding and knowing kind of what steps to follow, and then having the right team on your side or behind you that can make it happen for you, right? Because a lot of these things are a little bit too complicated for the average person that has to go to work every day, that has other things to worry about. To keep top of mind is just too much, you know what I mean? This is why we're here. But in April, or when your 6 months is coming up, your tax season. So a lot of times I'll have buyers come to me and have a plan to put some sort of amount of their tax refund or something like that aside for earnest money. Okay. In addition to that, you could always use a lot of times people that work for the school district, educators, people with the, what have you. 401k funds can be used as well. As long as they're being used to purchase a primary residence, you should, in most instances, have an ability to use those funds at no penalty. Again, as long as it's a primary residence, which in this case it would be. And then, of course, the third option, and this is outside of using all of your own funds, would be gift funds from a family member. So on any government financed FHA, which this program, you can also receive and use gift funds from a family member or a close relative or friend. So all 3 of those things are additional, methods that you can use to help increase or add assets if you need it, right? Which in this exact case, you're talking about earnest money deposit in the 3,000, 4,000 range is really all you should need of your own out-of-pocket funds. So especially with this amount of runway, few months, 4 months, 5 months, I think we can have you set up for success pretty easily.
Yeah, because it was difficult when I was getting approved. I was only approved for about $230,000, and all these houses were in North Las Vegas. I'm like, I am not. I work by the M Casino. I'm not living out there.
That's exactly where I'm at too. I'm actually on St. Rose in Maryland, so I'm very close to the M Casino as well.
Okay, great. Yes, I love Henderson. I've always had Green Valley area. Even this area, I'm by the South Point. It's actually not too bad over here. Not bad at all. It's quiet. My wife likes it. So there's a lot of area we can play with. I'm just really hoping that now is the time, God willing, that
Yeah.
we can actually get our house. For once in my life, I would like a house.
We'll
I
make
guess,
it happen.
like-
I'm confident.
Like Mario had touched on, it's so important to have the right team with you because, you know, everyone on the same page, knowing what your goals are, knowing what your bottom line is, we can make it happen. It's just, we've got to be all on the same page together. Communication is so important, and just making sure we make it happen for you. That's what we're here for. So.
Yeah, we're not asking for much. I mean, it's just 2-car garage, 2 house. That's it.
Yeah.
2 house.
2 bedroom.
2-bedroom house, 2-car garage.
Yeah.
So that's all just a starter home, just something.
Absolutely.
And that's basically all we're trying to do, and keep our payments if possible. I don't know if you guys you can correct me if I'm wrong.
Sure.
Is it possible to keep it below $2,000 nowadays?
It would all depend on the house you're looking for. Now, how you get there and how you make that happen will be up to, and we probably don't want to go into too much detail here on the recorded call, but we'll talk about that more privately. But what the buyer strategy looks like and what you want to make happen, we can reverse engineer from the very beginning to literally anything that you want. However, it's a matter of getting you into all of these different pieces of the puzzle that make sense for you. The area you want to live in, the type of house you want to be in, then the mortgage payment, then all of these different things that, it takes some strategy, right? We want to do it the right way. We want to make sure that,
Okay.
So,
that's why it's important to get in touch with your team, myself, Mario, even, months before you plan on purchasing.
Yeah.
So that he can orchestrate it working backwards, engineer backwards. And we all know up front, okay, this is what he wants his payment to be. Well, for his payment to be this, Maria, you got to be looking at houses for him with taxes like this. Because sometimes taxes can make a huge difference in a house payment or HOA, And so there's a lot of puzzles or a lot of pieces of the puzzle that we have to fit together to make it work. But
a lot of people would be surprised, to be honest with you, because I encourage this methodology with all of my real estate partners and clients over the years. It's very few people actually will come to me and be ready in 2 weeks. You know what I mean? Some do. That's fantastic. Usually they're people that have already owned homes previously, but many of the time that I'm helping people or families get into their first home, it's going to take a few months for them to understand the process, set them up for success, build the game plan for them to make it happen. And then before you know it, once we have them ready, boom, they're going to close in less than 30 days. No problem. Okay. But it's just a matter of getting that ball getting that ball rolling, educating yourself throughout the process, and leveraging us, the experts in helping you get there. You know what I mean?
Yeah, absolutely. I had a friend I've known for 15 plus years, Denise. She's a realtor. She's been doing it 20 plus years, like Maria.
Nice.
And she tried real hard to get me in and try to find, but again, I was $4,000 short. And it's like I keep hitting a wall and a wall and a wall. So I'm hoping this program, working with CCSD, this new program you guys have going, the grant, I guess, is going to be beneficial, and hopefully it will work out.
Yeah, 100%.
Who are you yelling at? I still hit the neighbors, you know what I mean? I don't want her. My dog is yelling at everybody.
I have to be careful with my chihuahua sometimes too, man. I hear that.
Yes, they like to bark.
I hear that.
So
we'll definitely talk more offline, Jason, specifically about your situation. I'd love to get with you, have a longer chat, dig deeper, maybe have you. My office is also on the corner of St. Rose and Eastern, so if you want to come in, sit down in person. But just get started. The earlier, the better. Have a game plan, and Maria and I will set you up for success.
Okay, so we could do it even before January, whatever, or the sooner the better.
Yeah. Okay. Honestly, the sooner the better. Yep. We'll plan something offline for sure.
Okay, sounds good. Thank you.
Awesome. Maria, go ahead.
All right. So, I mean, the importance of team we talked about, making sure that we are all on the same page is so important. And then, if let's say somebody is listening and they are ready, they want to get the process started, what do you suggest, Mario, being the very first steps?
Reaching out. Literally, it sounds kind of corny and it sounds, you would think, obvious, but reaching out, whether it's to you, to me, or both of us directly, but reaching out and being able to ask those questions that any first-time home buyer is going to have, regardless of if you think they've been answered before or you think you have answers from someone else. Reach out, put some questions together. You know, on my end, I'm always doing a few very key things when I'm talking to someone for the first time and trying to figure out where they're at in the buying process. First, I'm trying to figure out what their timeline looks like. Okay. Why that's so important is because I feel like throughout the home buying process, especially in the beginning, like discovery stages, if like I need to know what that urgency is. Okay. Because if there's not enough urgency for you to start moving forward with what items we'll need, how I'm going to have to start explaining all of the different moving parts with employment, income, assets, credit. It sounds like a lot, but I'm going to make it so easy for you that you won't even realize that it happened. But I can't do that without urgency. So I have to find out, you know, what your timeline looks like, what the urgency is, how far into a lease are you currently? Like we just talked with Jason, when does your current lease expire? Are you living with family? Are you living with friends? Will you be having, you know, will you be moving in with a roommate? Figuring out what that looks like. And then, you know, going from the urgency piece, we'll get into just the real traditional, super easy stuff with, again, those 4 pillars of qualifying. Okay. So if you think you've been pre-approved before, you think you've been pre-qualified, you think you've talked to someone and, you know, what have you, if they haven't done income, employment, assets, and credit with you, all 4, all collected and reviewed items and all recent and up to date, those are the 4 pillars of what a true pre-approval is that would allow you to go out and confidently shop in the market. So that's going to be the next stage of the process that I'm going to be going through. And then the third piece is partnering, of course, with you, you know, as on the real estate side to then find that property, because then we have to tie a subject property or properties that you're interested in to that pre-approval.
I know when I'm working with my first-time home buyers, they are typically so overwhelmed with
yeah,
just don't know what the steps are. And the one thing that, you know, over the last 22 years that I have learned to do is literally hold hands and baby step the process.
Got to do it.
There's just too much and to like put it into their head. It's just too overwhelming. So, you know, with you and with myself, as we're holding their hand and taking them through each step, I never want anybody to feel like, oh my gosh, this process is too much. Then they just don't do anything. Right.
Yep. Right.
So just, you know, come alongside of us, allow us to help you and walk you through the process, and we will make it as easy as possible. And, you know, it doesn't have to be difficult. I have heard horror stories, and it doesn't have to be that way. If you have the right people around you and the right people walking you through the process, it doesn't have to be a painful experience.
Right.
No.
What about co-signers? I don't mean to interrupt. I'm sorry.
No,
Mark.
you're fine. You're fine.
Co-signers, do they help? Like if my mom wanted to co-sign, how does that help?
On this particular program and on any traditional government or conventional first-time homebuyer program, they allow for what's called a non-occupant co-borrower. And it's a little bit different than most people are more familiar with the auto industry and how co-signing works on a loan application, where they're a signer or signee on the contract, just saying that you know, they're supporting the purchase of this, and if anything were to happen, then they'll take liability, and there, boom, you got a car or whatever. Right. On the mortgage side, a non-occupant co-borrower is somebody that qualifies alongside you. They do not have to live with you. They don't even have to live in the same state. So it can be any family member, any relative, anyone that lives in any of the 50 states, etc., qualifying alongside you, but they are qualifying as a true borrower. So much like how I'm qualifying you or any other borrower on the file, I'm still taking a look at their income, employment, assets, and credit. Now, most of my non-occupant co-borrowers that help a kid, you know, or someone, you know, another family member qualify, normally it's a parent or an elderly relative that is on some sort of fixed income. So if it's Social Security income, disability income, pension income, all of those are qualifying incomes. Okay. So again, if they don't have a job, but they have Social Security income, disability income, pension income, or some sort of fixed income of retirement, they still qualify. So, but it is a true, actual qualifying co-borrower.
Right.
Okay,
But
so that
how does it help
conversation.
the home buyer as myself?
Oh,
How
immensely.
would that help me
It was
as far as in the
specifically.
long run?
It's a tool that we use specifically for income qualifying. So if
Oh,
you, let's say, for example, you wanted to buy more house than your individual income would qualify for, that's when we would have a conversation about introducing a non-occupant co-borrower into the file.
we can get into that more later. Gotcha.
Exactly. Yep.
And
Gotcha.
also with
Thank you.
assets too, right, Mario? Like if
Yeah.
they have
So
more assets to help with the file, that would help.
it does help
Okay.
with assets. So in the way of the assets, if the family member has, a large amount of money in his checking, savings, retirement account, what have you, it does allow you to also use those as your qualifying assets. However, we can use gift funds again on this program or any first-time homebuyer program
Right.
without having to add another co-borrower to the file. So, we don't have to have them added for their assets to work, because they can essentially gift you whatever amount of money that you would need for the file, or your earnest money, or a down payment, or whatever the case may be. But yeah, this is all just a part of figuring it all out. You know what I mean? So, and that's,
Exactly. Okay. Thank
yeah,
you.
yeah, you're welcome.
Yeah. Well, we discussed a lot.
It's already been over 30 minutes and it doesn't even feel like we've been talking for 5.
I know. I love it.
That's true.
Is there
And I
anything
appreciate the invite, Maria. Thank you both very much.
Yeah, you're welcome, Jason. I look forward to talking to you actually more specific
Yes, we
about it.
will. We will soon. We will definitely talk soon so we can get into more detail, more personal stuff and figure stuff out.
Yeah, well,
Exactly.
speaking of that, Mario, why don't you and I both share how people can get a hold of us, because hopefully this will get shared and other people will be listening on this awesome program and they can reach out to both of us. So where are you easy to be found?
So I feel like I intentionally make myself the most transparent and easily accessible person in our community, because I am all over social media. So I know a lot of people don't do social media, but that is one thing that, I don't do for entertainment, but I do for, again, access to the community. And you can find me on all of the different social links. Actually, if you go to my website, theescobedoteam.com. There's actual links to all of my social media profiles there on the main homepage that you can literally click to, and it'll direct you to all of those social media pages. But the main hub would be theescobedoteam.com, at the Escobedo Team on all social medias. And then, of course, my office, again, is local here in our community on, like I said, I'm on the corner of St. Rose and Eastern here in Henderson. So very near Anthem, the Anthem area. So, but yeah, I'm very, very available all of the time. So you can reach me pretty easily.
So you're by the Wells Fargo, McDonald's, that corner?
Just right before Siena Heights. So right one street. One light before Horizon Ridge.
Right. Yep. Okay.
Yep.
I know exactly where you are.
Yeah.
And my office isn't too far, right down the street.
You're close.
And St. Rose and Seven Hills. So,
right.
I actually work out of Summerlin too. So I'm on both sides of the world here. And my website is mariahickman.com. And I am mostly on Instagram. I don't do a whole lot of social media, but Instagram is realtor_in_Vegas. And I, like Mario, am accessible all the time. I'm answering clients at 5 a.m. up until probably 11 o'clock at night.
Yep.
When you love what you do, it's not a job, right?
That's right. That's right.
Yeah. We are on a Teams call here at 8 p.m. So that's exactly. And then too, Maria, I wanted to maybe pick your brain a little bit, or at least offer this idea to people that, obviously Jason here and people that are watching this recording here, maybe before the end of the holidays or before the new year. I'd love to get people that have viewed this opportunity, down payment grant, or just, in general, that are curious and want to get together in person, but maybe we can put together some sort of like a lunch and learn, or I don't know, some sort of something at a local establishment here, so we can all get together and kind of, meet each other in person.
I think that would be awesome. And in
Yeah.
between Thanksgiving and Christmas, it would probably be a good time to get together and just have some sort of a holiday get together. That'd be great.
Yeah, absolutely. I'd love to help co-host that and make make some more opportunities happen for for our community. So
Well, let's do it. Let's start the
Cool.
party planning. We'll figure it out and get it out there. And just want to thank everybody for either being on this call or watching this call. And we hope that you find it totally helpful in your endeavors. We are going to be here for the long haul. So
Yes.
reach out to one of us and we will definitely get you going.
That's it. We're here to help, guys. Maria, thank you so much for having me. I appreciate it.
Yeah, thank you. Everybody have a great night and we'll talk to you guys soon.
Nice meeting you, Jason. Take it easy, buddy.
Bye,
I look forward to
Jason.
helping you
Hey,
out.
Lauren's there too. Thank you for being
Yeah,
on.
Lauren, thank you. See you guys.
Bye.
Bye.